Hey Matt, Troy Boisjoli, CEO of ATHA Energy. We're an at-scale uranium exploration company focused with the largest land position across the best uranium jurisdictions in Canada.
Troy, good to see you. Good to see you. I'm just calling up because I saw the news today with regard to Angulak. Some obviously pleasing headline numbers there. What can you tell us?
Yeah, excellent result off the back of a drill program. This is our maiden drill program at Angilak. We produced about 25 drill holes off of 10,000 meters. As an outcome of that, it was widely spaced step-out drilling from the existing resource with the objective of expanding the envelope of mineralization, expanding the resource potential there significantly. And what we're able to accomplish is we were able to wrap a target model around it. And that target model now has a range of 60 to 98 million pounds in terms of a resource growth envelope around Angulak.
Right. Okay. Brilliant. So, and I'm going to dig into that in a second. And I think like some pretty, like say some big numbers in there, some big headline numbers, big grades, etc. But you've got to work. We've got to demonstrate to people the economics are going to be there, right? So we need some clues. Before we do, can you just remind people of the business model? Because there's a lot of projects in the portfolio. I want to understand the plan of attack.
Yeah, a lot of projects. Recap, we've got 8.5 million acres of exploration property across the Athabasca Basin, the Thelon Basin, the Central Mineral Belt, Labrador, right from early stage generative to more mature. Okay, and our most mature project is one that we acquired through the acquisition of Latitude Uranium last year. That's Angulak, 43 million pounds. So what we did this year is we invested across the spectrum. We invested across the profile of our asset package, being from the most mature, which is Angulak, right through to the generative. And so what we have is, you think about the business model, and it's looking at a diversified investment portfolio internally, which then is moving Angulak up and to the right and maturing it. And at the same time, then investing in a generative stage of exploration properties, which in our view provides an unparalleled amount of discovery torque and discovery exposure within the, uranium landscape.
Right. Okay. Like I say, I think if some people looking into this might be concerned that a new company with a lot of things to get after may not be focused. So can we be really clear about the order of play and how you're allocating capital to that?
Yeah, order of play. Hey, we are focused on moving forward our most mature projects, and that started with Angulak this year. That started with having a very realistic view. Our critical path at Angulak was growth. We bought that project, we bought that company because it was at an inflection point. It had had a significant amount of work done to date. It had enough work done that allowed us to take a very real view on what we felt the growth potential was at the project. And then over the course of the summer, we stepped out and we made a material step in realizing that growth. Okay, so Angulak first, moving forward, moving up and to the right in terms of resource expansion, and with an objective of moving forward into a development stage project. You go downstream from that. Then we also have Gemini. Gemini is a discovery stage project on the eastern edge of the Athabasca Basin. That is a project that is pre-resource, advanced stage exploration, focused on advancing Gemini forward. And then in addition to that, we are looking at distilling out the highest probability, highest priority targets from the largest package of exploration property in the uranium landscape. So we're investing a portion of our dollars in that exploration torque and in that exploration upside. So very structured, very methodical approach to what we're doing, focused on our most mature assets and advancing them forward.
Okay, bit to go through. I'm going to come back to Angulak. It was part of today's news, so yeah, of course, I'd want to. The Angulak was in the hands of Latitude previously. I think at the time that you struck that deal, there's $7 million in the bank. Why is this better in your hands than their hands, and why should people value it differently as a result?
Well, hey, I'm not discrediting the work that was done to date at all. I think when you step back and you assess it, this is an extremely compelling project. It went from 14 million pounds to 27 to 43 year over year. Those years just happened to be 2011, 2012, and 2013. And when you contextualize that versus the overall uranium space, you know what happened in 2011, that led into the long night in the uranium space. So it was a function of timing, and then we put together a team that has significant experience in developing uranium assets. I had the opportunity to come up through Cameco, right from early stage generative exploration right through to operations. I was a chief geologist at Eagle Point, which was one of Cameco's operating mines. That mine had a very similar profile to Angulak. There's 70 million pounds remaining there at 0.7. We're looking at Angulak, very similar type deposit, 43 million pounds, 0.69%. After that, I had the opportunity to join NextGen, on the ARROW project. Came in after the maiden resource, had the opportunity to grow that up from 200 million pounds to 336, where it sits today. Our vice president of exploration, Cliff Revering, he was the chief geologist and helped bring Cigar Lake into production. So our team has a skill set that is focused around, from early stage projects right through to resource, right through to operations. And we understand uranium and we understand this geologic setting. And, that's what led to our view on acquiring this property, acquiring this project through the acquisition of Latitude. It's because it was at the stage where there's a fantastic foundation, and we had a look through based off the amount of data that has been collected to date, that there was significant growth opportunities there. And so it was an inflection type project. That's why we bought it.
Okay, so you've got the team, the relevant experience on this one, but I want to try and understand all the reasons why it wasn't getting valued before and see if that's a problem in different hands, such as, we're talking about the Thelon Basin, right? It's up in Nunavut. It's quite far north. That comes with its own challenges.
Yeah,
Can you explain why that holds no fear for you?
Yeah, no, it does. And, I think a few things that are different. Okay, you look at you look at the inflection point of the project's at. It's at a mass right now on a scale that has the ability to then have a line of sight to what we said today, which is around 98 million pounds on the upside. And I'll get into that in more detail, but that's not the constraint. Okay. None of it has a jurisdiction. None of it's a great jurisdiction. About 47% of the GDP is mining. And what has happened between the last cycle and this cycle is you've had Agnico build mines in the area. The supply chains are different. The supply chains are now established, etc. But in addition to that, to your point, you need size and scale as a company to be able to operate in Nunavut. And ATHA, by design, we were a company that came to market in 2023 with the expressive purpose of taking advantage of a generational market in the uranium space. And that came through an at-scale approach. We came to market with 3.5 million acres of exploration property. We've grown that significantly. We have a strong balance sheet. We have strong access to capital. And we have the size and scale now to be able to make a material difference on what we truly believe is a very unique project within the Canadian uranium landscape.
Okay, and again, it was obviously before Latitude had it, it was sitting in another company. Does it really come down to timing, access to capital, and the relevant experience? Those seems like three quite important features. The first two people sort of shrug the shoulders and go, "Oh, but of luck here." Do you think you've simply timed this well, or is it really about how you approach being able to not just demonstrate the value, but sort of release that value potential? Nearly 100 million pounds is good. Is it exceptional though in this market?
I think you nailed three key criteria. Okay. Timing, we were very intentional with the timing in having we have an aggressive growth strategy at ATHA. We're very intentional with that strategy relative to the timing of the macro market. We believe the timing's very good. And, then in terms of the people, we built a team around this story. With that team, I highlighted on the technical side of our team, but our access to capital and the ability to access capital as a function of that being able to develop projects forward is equally as important. We have a very strong capital markets team. Over the last 18 months, we've raised about $55 million into the deal, predominantly institutionally. And so access to capital is a very, very important factor. And then that allows us to have a look at projects like this that in our view was significantly undervalued, and then have a view on the upside, and adding the upside, adding the scale that then moves us forward. And it is a uniquely scaled project. When we look at Canadian projects or Canadian companies, development stage companies with assets under management, you have NextGen, standout, world-class asset, the Arrow deposit, 336 million pounds. You start to go to the left of Arrow, and you get into projects that are in the 100 to 130 million pound range. There's only a couple of those. And then the remaining projects are in the 50 million pound range. And so there are very, very few projects within the Canadian uranium landscape that has the scale potential that we're seeing here at Angulak.
Right. Okay. And sorry to keep banging on about it, but I just want to be really sure, because like I say, these assets, we can talk about Gemini in a second if you want, but these assets were not valued by the market before. And if it was simply a case of it's timing and the fact that the companies were kind of cash constrained, that's one thing. I can buy that. If there's any sort of underlying issues with the assets, then that's an entirely different set of problems here. So with the data that you were looking at, you've referenced in the press release a sort of previous technical report which you've looked at, and had they done things the right way? Had they gone about it the right way? Is the information there that you needed, or has this been a kind of a process of continued discovery for you?
No, the resource is solid. Okay, no issues with the resource whatsoever. I've got a resource background. Cliff Revering, or BPX, was SRK's QP, qualified person, as it relates to uranium resources kind of globally. So we've had a look through. We have no issue with that at all. It simply came down to, could they have a look through to add the scale? And that's what we did. You think about, okay, let's run through a decision tree here. Okay, so entering into this project at the start of the year, looking at adding value. We could have easily looked at moving this project from a historic resource of 43.3 million pounds, looked at incremental resource growth to move it up the curve. We didn't see the value in that. The value in this project comes through unlocking the scale. And so instead of going and focusing on incremental resource growth, we focused on expansion and material expansion that is going to get this project to a tipping point to move it forward into a development stage. And along that path, you think about the re-rate opportunities that comes along with that, right? When you look at how companies that are managing, uranium assets in the Canadian landscape are valued on an enterprise value per pound ratio, and then you look at the growth potential associated with this, and we really like that. We really like that business case. We really like the business case to drive this forward with the scale that we've now significantly de-risked.
Okay, so the asset's good. You're saying the asset's good, but there's more work to be done, right? You got to move this through the phases. So it comes back to that timing thing. So you're telling me you've got money and you've got access to money with your group, etc. But how do you time this for the current market as you see it? What seems to be happening out there is companies that can show that their near-term revenue are getting rewarded. The old model of building this thing out to the edge of the envelope, not so much anymore. And also, being responsible in terms of showing a sort of a capital expenditure, which is not going to be punitive to the company's valuation, because people will think, well, where's this money going to come from? How the heck do they get this finance? So can you give me a sense of, in those early days, how you imagine getting through that kind of process in a market which hasn't really had too many peers that you can look at and go, well, there's an example of exactly how things should be done, because it's been a bit messy out there.
Yeah, so maybe I'll back up and just provide some context of where we think we're at relative to this uranium market, because that's an important driver here. We've got, we're at a stage where we're entering into a long-term contracting cycle. And, we've chatted about this before. I think, the principal component in the price of uranium, the spot price of uranium, typically is contracting cycles. You go back to 2006, entering, the amount of pounds that were becoming uncovered during that period, and then the subsequent contracting that needed to happen to get to fill that demand up was significant, and that was a price driver for uranium. That put upward pressure on the spot price of uranium. We're in a very, very similar period right now. Okay. And so our view is, when there's a significant amount of upside pressure on the price of uranium and a scarcity of scalable uranium assets in the market, that's a good time to be building resources. And that's a good time to be advancing projects forward. Because once you go from that producer down to advanced stage developer and go down cap from that, that's where, people seeking alpha are going to turn as this market continues to mature. And in turn, then having the ability with the size and scale that we are at ATHA to be able to advance projects forward with access to capital, add value on the balance sheet as a function of that, and add enterprise value as this market is maturing, is something that we think puts us in a very unique position and a very strong position.
Right, but talk to me again. What we're seeing again in this market is, okay, I talked about people getting rewarded for showing that they can get things financed. You're in the, I guess, enviable or unenviable position, I don't know, of having multiple assets on the books, and they're at different stages of development. You still need to make sure it's almost like silo some of these projects at the right point financially and structurally, to protect the rest of the assets. Can you just give me a bit more detail on how you picture this going, specifically Angulak being moved through the phases? Does this a potential spin out at some point, or is it how do you kind of manage the financing of these projects? We've seen some projects, in Timmins, $100 million companies raise, $2 billion in financing. It's been exceptional, but they kind of created these kind of silos for their assets. How does it play out in the uranium world?
Yeah, in the uranium world, okay, first in the near term, right? It's about advancing, it's about building resources, it's about capturing the value in that curve. Okay, we've de-risked that right now. About, if we think in the near term, about 70% of our time, effort, energy, and capital is going to, on a forward-looking basis, is going to go into advancing Angulak, advancing resources. But beyond the current, we've got 98, an upper envelope there of 98 million pounds. That only includes areas that we already currently have drilling into. Okay, and so the growth potential beyond that, we can get into that in a minute, in our view, is significant. But when it comes to advancing the portfolio forward, call it a 70-30 split, looking at, and then you look at the overall market, in the context of the overall market. There's a scarcity of uranium assets. And because there's a scarcity of uranium assets and a significant amount of interest in the uranium space outside of the equity markets, okay, so we're talking outside of the equity markets, the opportunity to advance projects forward in a very strategic way is something that our group has experience with, right? And we have, we've got a strong capital markets team. Our senior vice president of business development was instrumental in the last period of the cycle on the investment banking side. We have a mature team, and so looking at the ability to optimize shareholder value through the proper capitalization of projects and developing them forward is front of mind to us. It's too early, Matt, for me to shed more light on that or provide more guidance, but I can assure you that these are things that we're thinking about, that we understand, and that we strive to get right to provide the most value for shareholders as we're unlocking the significant potential that we see at Angulak.
Okay, Canadian market. Let's look at it, because you've got the kind of next gens of this world. Super high grade,
Yep.
deep. But with the grades that they've got, maybe that becomes less of a problem. Permitting, licensing, more of a kind of, not a problem, but it's sort of a longer lead item, shall we say, in Canada. Does that change the way that you come at projects here? Do you have a bit more time to expand the edge of the envelope if it's not going to be able to kind of move through the kind of licensing and permitting phase as quickly as, say, in other jurisdictions elsewhere in the world?
Sure. So on the jurisdiction, maybe I'll just step back one. I'd be remiss if I didn't talk about the depth component of ARO. It goes deep. It starts pretty shallow. It's so I'll hey, that's That's a great deposit. But at Angulak, it comes right to surface, right? It subcrops, comes right to surface. The ability to the interesting thing about the regulatory process in Canada is that it's overseen by the CNSC, Canadian Nuclear Safety Commission. Okay, so it's relatively the same process in Nunavut as it is in Saskatchewan, as it is, throughout Canada. And having a line of sight through that process is about, you talk about permitting timelines, and it's interesting because people at the stage of a final investment decision, everyone's always talking about permitting, but that is not that whole critical path when you think about development timelines, right? And so the opportunity to optimize development timelines comes in how much can you do in parallel? And that comes with a line of sight on where the project's growing from a growth perspective. Okay, if you can move from being reactive to predictive, it allows you to optimize development timelines. It allows you to do more things in parallel.
What do you mean by that? Tell me about that. From reactive to predictive.
Yeah, that's why we did this. This is a model. This is an exercise that I've went through a number of times. Okay, you think about resource growth projections at during my time at Eagle Point. You think about projections from going from maiden resource through to final resource at Arrow, etc. You do the work. You model out the drill results, even if they're wider spacing than can be included in a inferred mineral resource. But what that does is it gives you geologic control. It allows you to be more predictive in the outcomes and understand where you're going, and having the forcing function then be work. And then you're not surprised. And if you have the forcing function become work, then you have the ability to put other work streams so-called at risk, but run work streams in parallel to be able to advance and optimize projects moving forward. And so that's the place technically that we like to be in. It allows us to optimize projects moving forward.
Okay. And Nunavut, we've seen a few projects from Nunavut. What's the kind of First Nations situation like up there? Because there's obviously a lot of bands operate, and there's a sensitive commodity. How do they feel about uranium?
Yeah. Hey, like I said, 47% of the GDP is mining. The nearest center, the closest center is Baker Lake. Okay, the closest community is Baker Lake. A number of the community members from Baker Lake work in the mining industry, understand the extractive industry, understand the resource industry. It is an area that has seen and will continue to see benefits from mining. And as a function of that, there's always, anytime you're talking about developing resource projects in Canada, in northern Canada, etc., it is, you do it in a respectful way. You continually engage. You continually, respect the rights of the Indigenous peoples and the Indigenous communities. But in this area, hey, we've got, we happen to have an agreement in place currently, and it allows us to move through this stage. And we like it. And from our perspective, it's a great jurisdiction to be working in.
Okay, and talk to me about the technical report, because if I listen to what you said today, you say, right, maybe it's a 70-30 split in terms of time and money on focusing on Angulak as the most advanced project. But I don't necessarily agree with that ratio in terms of the way that your company is valued. I don't think Angulak represents that percentage of the value of your company today. So what have you learned? And, what are you going to do off the back of the kind of new revised sort of technical report that's going to allow you to kind of release that kind of incremental revenue going forward? What's important?
Yeah, what's important is the scale to kick this thing over into the development stage. It comes through scale. Okay, and when we look at the technical report, let's unpick that a bit. Okay, so we've got. I think about it as levels of confidence, levels of certainty that we're moving through. We've got 43 million pounds right now in a mineral resource estimate. That then over top of that, based only off of drill hole data and only off of drilling with uncertainty envelopes around that, we have an upper bound of 98 million pounds. Okay, within that upper bound envelope, we view that as an opportunity to move that forward in the near term. Over top of that, Matt, we have work that we did this summer. There's outcrop on surface, mushroom lake outcrop within this LAC 50 envelope that has mineralization on surface, radiometrics on surface over 3 kilometers without a drill hole into it. Okay. Over top of that, we've got a number of areas. We're right at the edge of a sandstone basin, similar to the Thelon Basin, similar to the Athabasca Basin, that has mineralization on all sides of it, on all edges. It's got mineralization at dipole, which is not that's confirmed by drilling. Okay, was not included in this exploration model. On the other edge, we've got LAC 50. On the other edge, we've got an area called 9 iron. Okay, and so this is a basin with mineralization all around it, outside of the LAC 50 envelope. So what I'm saying here is that we've got a resource, we've got a growth envelope, and then we've got exploration potential that is significantly de-risked over and above that resource envelope. And so when we point to this project as having unique scale, it's not arm waving based off of geophysical targets. It is based off of actual results from the ground right now. And when we say the forcing function is work, that's what we mean. That we'll be able to drive resource growth through the projections that we have. And then in addition to that, we'll be able to continue to drive that resource envelope higher, or that exploration target envelope higher, based off of the work that we've already done.
Okay. Understood. So your kind of takeaway is there's a process which you understand. There's a timeline which you can work, you're working to, and there's obviously some your target is like, let's make this thing, let's demonstrate the scale of this thing. Do you think in the context of anything else that you're seeing out there in the market that this will make it will stand out? Because I think we talk a lot on the macro side of things, and what is clear to us, what is clear to anyone who sort of knows a bit about the space, is there's a supply issue coming down the line. It's not a case. It won't be a case of if you pay the most money, you're going to be guaranteed to get it. It's a case of even if you have lots of money, there isn't going to be any to buy. That's what the North American market looks like at the moment to us from a supply perspective. We've seen things like Paladin missing targets. We'll see if that recovers next quarter. We've seen Peninsula finding it a little bit harder to get into production when they thought they could get into production. And the production that is coming out of North America is, I'm going to call it piecemeal, right? Because these are not big numbers compared to the demand profile. When does that make your project? When do those factors make your project more valuable? How much more do you need to demonstrate?
Okay, well, a number of very good points there, and let's maybe unpick a couple of them. Okay, you think about the uranium landscape traditionally, and within the Athabasca or within the Canadian uranium landscape. Traditionally, it's been only the tier one of tier one assets that moves forward. You think about the current assets in production in the Athabasca Basin. You have McArthur River and Cigar Lake. Those are two phenomenally high-grade deposits, phenomenally high-grade assets. But historically, why that has been the case is exactly what you say. It's supply-demand. You could have a good project with good potential, but ultimately the demand wasn't there. This is a much different market that we're entering into, which means then comes down to the scarcity. There is a scarcity of projects. Arrow is going to be, the next, you look at the progression that, even Denison today, right? They're neck and neck with that stage. They've got, EISs that are final, next production stage projects. That's been baked in, Matt. That production is needed, not just that production, but significantly more production. And then you start to look at the scope and scale of projects that are out there, and there is a significant scarcity of projects. And because of that scarcity, you have a project that has tier one scale potential within, a political jurisdiction that is Canada, and a stable jurisdiction within this North American sphere, with a uranium market that is becoming significantly bifurcated by the day, it seems like. And we really like the potential there. We really like the value generation that comes with being, advancing a uranium project at scale in that market.
Okay. What's going on at the moment? Because I think people find it really hard to read the market. I'm looking at most stock. I mean, I think you've done okay. I guess off the back of today's news, but we're looking at energy stocks across the board, all down at the moment. Is there still some residue from the Trump election? We're worried about tariffs. We're worried about what? Fossil fuels making a comeback? What's going on out there?
Yeah. Hey, I think you maybe a little just a little softness today off of a pretty substantial amount of positive week last week. You know, you look at Cameco, you look at NextGen, you look at the leaders in the space. Last week, very, very positive. You know, we ended the week strong, and you look at that, and I look at today as maybe a bit of softness as a function of that. But overall, you know, you look at the uranium space, and there has been a bit of a disconnect between what the incredibly bullish sentiment within the uranium macro environment. You know, we have literally never seen a market like this. It is a generational uranium opportunity, and right now there's a bit of a disconnect between the equity performance and the overall macro sentiment. But we view that opportunistically. You know, this is not a market that needs a number of additional catalysts to come on. It is there and it is progressing. And I think the biggest catalyst that you see is the one you don't expect. And the one that isn't forecasted and isn't projected. And, you know, I think we're seeing where that could potentially come from. You know, you look at the supply side, I think the opportunity for a supply side shock in this market is tremendous because the supply side is so thin.
Yeah, it's interesting times today. Like, Troy, I'm going to go into kind of digest the Angulak press release. There's a lot to it, especially the technical study as well. You guys. What's your takeaway? You pleased with what you see, and you're pleased with what you're going to do, and so the fact you know what to do going forward.
Yeah. No, we're very pleased. You know, like I said earlier, we bought this project, we bought this company to be able to bring the value to it through growth. We stepped out materially. All of the holes were mineralized. We've captured that and contextualized that within a exploration target that starts to demonstrate the near-term scale potential that we've seen. You know, and moreover, you know, we took in my view, a very rigorous approach. You know, we didn't include a bunch of geophysical targets in this model. You know, it was based only off of drilling. And with that, you know, within the LAC 50, you know, LAC 50 trend, LAC 48, LAC 52, LAC 54, these are structurally controlled corridors. These are fertile structurally controlled corridors. We have drill holes into 28% of those corridors within a small box around the LAC 50 deposit. Okay, you start to think outside of LAC 50, and we're literally just scratching the surface of this project. And so, yeah, we really like what we've seen from Angulak. We like the results. We like where this is going, and we believe now we're in a fortunate position of having enough data again to understand directionally where this project is headed.
Okay. Well, I appreciate you making the time for me today. I just wanted to kind of stick on the plan. I just want to understand the plan of attack. It's the difference between, you know, well, success or failure, obviously, and maybe we can come back and get into the weeds on the drill planning going forward as well, because I think it's potentially quite exciting for you guys.
Yeah, it is. It is exciting, and we take a very systematic approach to what we're doing, and so we're in the planning stages right now, going into 2025. What I can tell you, as we're going through that process, you know, the objective of it is twofold. It's resource growth at Angulak within the areas that we've defined, and then outside of that, it's moving that envelope higher, you know, through additional exploration and discovery work at the project.
Okay.
You know, within that, we'll have a mix, right? It'll be a focus between resource growth and exploration. Operationally, we have a team that knows how to operate. We have equipment, fuel, inventory Mlbs in already. You know, the ability then to look at, you know, the planning for a winter mobilization is very real. And yeah, it's onwards and upwards from here.
Brilliant, brilliant. And like, I'd love it if you could come back on and maybe we get into Gemini. I want to focus on the you know, your focus, but Gemini. When we used to speak to ATHA Energy before you came on and acquired them on a regular basis, and you know they, you know, obviously the Gemini corridor, but the hypothesis there being that there's a kind of parallel corridor there. I'd be intrigued to sort of see how you're coming at, you know, that exploration, what your hypothesis is.
Yeah, absolutely. Happy to come back and talk about Gemini drill program there as well. You know, expect assays back from Gemini in Q1 of next year. You know, and so we've, yeah, it's lots to go. And you know, and then overall, that we've, I think, as you're aware, we've invested more dollars, I think, in pulling up our generative portfolio of projects and maturing them into a large scale pipeline of exploration opportunities, and that continues to chug forward as well. You know, we've got a huge pipeline of targets, from early stage greenfields to more mature, which is Gemini, and then leading the way is Angulak. So it's exciting times in the space.